Good morning. Here is today's Korean economic news briefing. The Korean economy is navigating through a complex landscape today, significantly shaped by ongoing geopolitical tensions in the Middle East and their cascading effects on global commodity markets. We're seeing a palpable impact on everything from our daily fuel costs to corporate investment sentiments, with inflation remaining a persistent concern. Let's start with the most immediate impact felt by households and businesses: energy prices. For the first time in approximately 3.5 months, the price of regular gasoline nationwide has surged past the 2,000 won per liter mark. This represents a significant increase since May 20th of last year, putting renewed pressure on consumer spending and logistics costs. This climb is directly linked to the instability of crude oil supplies stemming from the Middle East. The government, recognizing this critical situation, has taken a decisive step to stabilize domestic supply by implementing a full ban on naphtha exports starting today. This measure is intended to ease the raw material supply crunch faced by our petrochemical industry, which has been grappling with soaring prices and limited availability. While the petrochemical sector has expressed initial understanding and appreciation for the government's intervention, there are growing concerns that the effectiveness of this export restriction may be limited. Naphtha, a crucial feedstock, is largely imported, and Korea's own export volume, particularly to key markets like China, 44%, and Japan, 38%, is substantial. These trade partners, along with Southeast Asian nations that rely heavily on Korean naphtha, are expected to voice strong opposition, potentially escalating into international trade disputes. This highlights the delicate balance the government must strike between safeguarding domestic industries and managing international trade relations amid a global energy crisis. The ripple effects of this unstable Middle East situation are also deeply affecting other sectors. Our livestock farmers, for instance, are facing a severe, double whammy. Rising international crude oil prices, coupled with a weakening won, are driving up the cost of imported animal feed, particularly corn, with ocean freight rates reportedly doubling. Furthermore, the increasing price of heating oil, or kerosene, adds to their burden. This could inevitably lead to higher prices for meat and dairy products in restaurants and supermarkets, potentially seeing pork prices, for example, rise significantly, exacerbating inflationary pressures on everyday necessities for the general public. This escalating geopolitical tension, particularly the ongoing US-Iran conflict, has cast a dark cloud over corporate sentiment. The Bank of Korea's latest business survey index, CBSI, for March registered a notable decline, with the outlook for the coming month showing the largest drop since January of last year, 2025, immediately following the declaration of emergency martial law. This indicates widespread pessimism across both manufacturing and non-manufacturing sectors, despite a generally robust performance in key export areas like semiconductors and IT. Globally, the economic outlook remains cautious. The OECD recently revised down Korea's growth forecast for this year to the 1% range while simultaneously raising its inflation projections, primarily due to the prolonged Middle East risks and the associated energy burden. While the overall global GDP growth forecast remained at 2.9%, specific adjustments were made, with the US showing a stronger outlook, up 0.3 percentage points to 2%, and the Eurozone's forecast lowered, down 0.4 percentage points to 0.8%. In response to the high oil price pressures, Morgan Stanley projects that Korea's 25 trillion won supplementary budget, if fully executed, could boost GDP growth by approximately 0.15 percentage points, with limited inflationary impact. Meanwhile, the U.S. economy shows stable employment but a rising unemployment rate, which reached 4.4% in February. While still low, an upward trend in unemployment could intensify fears of stagflation, making next week's U.S. employment figures and Korea's upcoming inflation data critical for market watchers. On a positive note for capital markets, Korea's government bonds are set to be included in the FTSE Russell World Government Bond Index, WGBI, a significant development that is expected to attract substantial foreign investment into the Korean bond market. Turning to the financial markets, global geopolitical uncertainties have led to significant volatility. Domestic equities saw a mixed close yesterday, with the Kospi initially experiencing a sharp decline before staging a partial recovery, closing down 0.4%, while the KOSDAQ ended slightly higher. Early trading was particularly impacted by reports of renewed US-Iran tensions and concerns over new AI technologies from Google potentially reducing demand for memory semiconductors, causing heavy selling in major tech stocks like Samsung Electronics and SK Hynix. However, robust institutional and individual buying helped pare losses. The broader market was also affected by rising U.S. 10-year Treasury yields, a stronger dollar index, and surging international crude oil prices. Rising bond yields are a critical factor, influencing borrowing costs across the economy and impacting risk assets like stocks and cryptocurrencies, including Bitcoin, which has been under pressure from the hawkish shift in interest rate expectations. The $1 exchange rate also surged, reflecting investor anxieties. Amidst these challenges, industries are pushing forward with strategic investments. The AI sector, in particular, is experiencing rapid growth and transformation. Seoul City is accelerating its AI transformation strategy, aiming to move beyond simple AI adoption to a full industrial shift. Companies like KT are reorganizing their AI strategy and reducing executive staff for efficiency, while NH Nonghyup Bank plans to inject 65 trillion won over 5 years into productive financing, targeting semiconductors, AI, and bio industries. New data centers, critical infrastructure for AI, are also being developed, such as the Solicito Data Center Park in Jeollanam-do, emphasizing sustainable, renewable energy-based power generation. Even public services are leveraging AI. The Korea Land and Housing Corporation, LH, is expanding its AI-powered welfare call service for elderly residents in public rental housing, demonstrating the widespread integration of AI across various sectors. Furthermore, in the global semiconductor landscape, Japan is discussing the integration of its major power semiconductor companies, ROHM, Toshiba, and Mitsubishi, to achieve economies of scale, a move significant for the critical components used in electric vehicles and data centers. The real estate market continues to face its own set of challenges. We are seeing a severe shortage of jaeons and wholesale rental deposits and monthly rent units, not just in Seoul's peripheral districts like Nawon and Guro, but spreading to Gyeonggi province cities like Gwangmyeong and Dongtan. This scarcity is leading to significant increases in rental prices, with some apartments seeing a jump of hundreds of millions of won in their jaeons deposits. This phenomenon is largely attributed to landlords shifting away from rentals towards sales due to increasing holding taxes and limited available properties. Meanwhile, the government's special crackdown on real estate crimes has uncovered widespread illegal activities, including price manipulation and fraudulent subscriptions, with nearly 1,500 individuals apprehended. There is also an ongoing debate about differentiating real estate taxes between metropolitan and non-metropolitan areas to alleviate the severe problem of unsold housing units in regional areas. Finally, for investors, the current environment demands heightened caution. The persistent Middle East tensions will likely sustain high energy prices and inflation, leading to continued market volatility. It's crucial to closely monitor the developments in the US-Iran situation, the trajectory of US interest rates and employment data, and the Bank of Korea's stance on inflation. Sectors less exposed to commodity price fluctuations or those benefiting from AI and digital transformation might offer some resilience. For the general public, it's prudent to brace for sustained higher costs for fuel and food, and those in the rental market should prepare for continued competition and rising prices. The government's measures aim to cushion the blow, but their long-term effectiveness remains to be seen amidst such complex global headwinds. That concludes our economic news briefing for today. Thank you for joining us.